so we're all good to go. Not much else to. I've got a few emails to go through, so we'll start off with. But there's only one that's actually looking at any sort of technical analysis. So let's start with that. That's the daily. We'll go with the weekly. Here we've got the pound yen is looking at it. Seems to be getting back close to that 200. Certainly is. This is on the weekly. There certainly is divergence there in terms of hidden divergence, and it's getting back towards this strong support resistance line. Now I would suggest that that level would be a Fibonacci. So here I've got the monthly of the pound yen, and this is Capital Index broker, and they go back into the 90s, unlike AxiTrader, which go back 5 years, which is annoying. However, so if we look at this fib from that level there, we can see that 50 there was a resistance, but the 132, the 38.2 around the 168 level was good support. If we come from this move here, we might find another one as well. So we'll have a bit of we can see that 178 area is what I think you're looking at as 174 across here. Okay, so this wasn't such an extreme level, it was just a horizontal, which you've noted. So we'll come back to the weekly. Certainly is a zone of support there that we can see. And this horizontal level of 174 you've identified is also a valid level. Okay. So that's good. Trend line. What are you looking at the weekly? Can you guys see these colours? I haven't got around to fixing them all up. Not really. Not seeing much there. But if we go from that one to that one, we're still not quite there. You go get him. So I don't know about that trend line or the channel that you've identified. Don't see that as much of a muchness, really. Oh, you've come across from that low there. Those lows. Did I just put fibs on that? Where'd that go? Where did the fibs go? Did I remove them? Oh, must be going senile. I don't remember removing them. Yeah, I mean, coming from here, I suppose it could be valid. It's not something I would do. The significant lows are obviously down here, or from this move here, and that's when it started trending. I think it's a weak trend line support, but it could be valid. Right, coming down to the daily, things are obviously increasing in volatility. This is a lot of the safe having over the Greek election, which is on this weekend, and the ECB, which is on Thursday night for us, Friday morning. And that is something that I'd be a bit concerned about, more so the Greeks than the ECB. I mean, the ECB is, everybody's touting it to do quantitative easing. I suppose the risk there is that it doesn't, or it's not enough, and therefore You'll get some more safe haven flows, which would ruin this trade. Um, and I don't think anybody would be surprised if Greece gets shoved out of the euro. If the Syriza wins, we're not going to find that out probably for several days. So it'll be next week that we'll know that. And even if they do win, then Germany will probably try and keep them in rather than suffer, any contagion of other companies or other countries stepping out of the euro. So that the Greek thing is still several, I'd say a week or so away before any major drama comes out of it. But it is still there as a risk, and that's what we're seeing the safe haven flow into the yen for. Okay, there was buying coming into the market on Friday, as designated by this, people getting out of the yen, I suppose. But the people are not going to go to the Swiss currency as a safe haven anymore. Why would you? Their currency is offering negative interest rates, so you wouldn't own Swiss assets. And that leaves the yen and the Aussie and the Kiwi really as the safe havens, and the US government, I suppose, as the US dollar as well. So fundamentally, I don't know about this. Technically, it's looking okay if this is a ring low. There might be an opportunity there. The pound is still doing okay, but starting to struggle with inflation falling, as we noted last week. So fundamentally, I don't know about it, but technically, it's starting to look okay. How are the other currency pairs against the yen? Just having a quick look, you'd obviously ignore this one. CAD yen, that'd be a struggle. The problem I have with the dollar yen is this was a lower high. If it makes a higher high than that, then yeah, I'd be interested in it, but not really interested in it if it's a ring low there. Euro yen, I'd be leaving euro alone until after or next week basically. Kiwi yen is a potential out of all of them. As a potential. The other thing you've got to look at in this, okay, cycling along your trend line. I suppose in that sense, what do you got? Bounce off the 61.8. One could make an argument. That it's now under the 50 and it's done a cycle under the 50, and this is just a phase 2. We only got class C divergence. Yeah. Soft resistance here. The one I did like was this one again. We took this, or I took this on the 4-hour last week, and making. There's some would say there's a pretty strong resistance level there, but owning Kiwis would be an advantage with the interest rate differential. Out of all of them, I think that would be the most desirable one to have, even as much as I don't like trading the Kiwi itself. The currency carry trade is something that's worthwhile looking at. Is it a range trade? Potentially it is, but we can see that it is offering us higher highs as we're sort of kind of making cycles, whereas the pound is not doing that. Pound yen's not doing that. Auto trading, that piss off. Oh, actually, I should have that on possibly. Yeah, compared to the pound yen, which failed to even get in the same high which the Kiwi yen did. Perhaps this one isn't as good as something like that. Food for thought. Safe haven flows. With this, that safe haven flows. Maybe that's why the Kiwi yen is in a range, because they're both attracting funds due to the turmoil and certainly out of Europe. perhaps it might be best to stay away from those currency pairs until that's out of the way, and stick with the US dollar and other pairs that aren't really tied to the euro, such as Aussie dollar, Canadian dollar, and look at those pairs until this is out. And that brings us to a bunch of the other emails. I've got 3 emails here, all asking similar kind of questions, and so I'll discuss those now. Colours are good, fabulous. First one is, following a Swiss bank announcement last week and the effects to date, I have a query regarding ongoing handling of the euro open positions. Alright. There seems to be some consensus that the SNB was reacting to a known or anticipated ECB announcement of QE next week. There is, that does seem to be the case, or there is a lot of articles about that or news about that the SNB did what they did because of what was coming from the ECB. They're obviously, the Swiss National Bank was carrying a lot of euros on their books, and wearing the cost of that, and with any quantitative easing that the ECB does announce on Thursday could potentially make the Swiss own more. And why would you be obtaining more assets that are falling rapidly? So that is certainly a valid argument. What the ECB may do, perhaps that the quantitative easing they're bringing is going to be a massive one, and therefore there's going to be a large move on the euro. I dare say if that is the case, then weakness in the euro is going to happen. If it's not the case, then perhaps you see a bounce in the euro, where the market's disappointed. So I'm sure the question here is, I'm sure the euro and the euro pound have been maintaining wide stop losses on the fundamental basis, expecting the euro to continue to decline and trying to stay in the trades as long as possible. Okay, so you're well in the money. If you got in short around here, I dare say you are well in the money. Certainly be looking to start to protect your profits. The markets are very much well overdone, and therefore the surprise would be to the upside. And that's the thing that the SNB probably should teach us, is that when the markets volatility is low to a certain direction, with the euro Swiss, no one was expecting it to go through $1.20, so that when that expectation is reversed, then the market can overreact, and you see it drop, $3.50 or 35 full points, 3,500 pips in the space of 18 minutes, 15 minutes, fun. In this week coming up to and the QE announcement, would you anticipate the euro to maintain its present volatility, so I can maintain my present stop loss, or should I tighten stops? On the basis of fundamentally the euro to continue to decline due to quantitative easing, are they likely to be gapping up? If you'd let me know your thoughts. Well, it really is, I think, based on depending on how strong the quantitative easing is going to be. Everybody's expecting it. If they don't do it, then the risk is up. If they do it a soft one, I think the risk is up as well. If they do what the SNB is hinting at, in that it's going to be a massive one, then keep your options open. In terms of the volatility, I don't see it. You've got to work out at what point do you want to. If it gets above this high here, do you really want to be carrying the trade still? I don't see it getting above that high over the news announcement. It would only sort of get above that if the news announcement is bullish, and by bullish I mean by not coming in at expectations or not doing anything at all. Um, and so that's, at that point you say, well, I don't want to be in this. Also be aware that the other lesson you should learn from the SMB is, your stops will get slipped. Um, AxiTrader don't even have the bloody low, the proper low of the Euro Swiss. It'd be interesting to see if these guys do. I mean, the proper low of the Euro Swiss was down here in 88 something. I think the Axis low was around $1, around parity or something stupid. But if you had a stop loss here at 1980, then you'd be filled down here, some 3,500 pips away. That's the lesson. One of the lessons that you should take out of the SMB is that the slippage is going to get you, no matter who you're with or where your stops at. And if the market does jump, then and you had a stop here, it might get filled up here at 20. That is a risk. How would I approach this? Look, if you're concerned about it, you're certainly well in the money on on both your trades. I'd look to lock a bit of profit in ahead of the announcement, and certainly have my stops there to protect against the against the risk that the market does rally off a QE not coming as expected. The other thing you should look at is maybe putting a target in rather than trying to just follow it all the way down. Put a target in, and you can put something in ridiculous at $1.12 even, or at parity if you wanted, and be happy with taking those profit. Yes, it's good to try and milk as much as you can out of the trade, but I think this move is pretty much overdone, and unless a massive quantity of easing does come out, you might see $1.14, $1.12. Otherwise, I expect the market to probably rally off this news. That's just my feeling. So it's kind of covered. Does that answer your question? It does. I suppose it doesn't really clear it up for you, because there's so many variables that can happen here. Will they do quantitative easing? Will they do enough quantitative easing? Will they, or are they going to do a massive quantitative easing? And there's three scenarios there. The scenario, if they do a massive one, then you're going to be sitting pretty and don't have to do anything. If they do a mild quantitative easing, how will the market react? If they don't do quantitative easing, how will the market react? There's a lot of different variables there, and how to handle those is different. I'd be looking to lock some profit in and trail the stop to an area where I say, okay, I don't. If it gets to this, I've had enough of losing my profit. I'll take the rest of my profit, and that to me would be above these highs here. A natural place for that to be there. Isn't that where you refer to your trading plan? Yeah, absolutely. It's a fair point. Is that you have your trading plan when you don't, or you create your trading plan when you don't have any positions on, and say, well, if this scenario occurs, how do I behave? So that when you do have a position on and things do occur, then you do know how to behave. Yeah. And that brings me to your question, Carol, is that with the SMB debacle, US short CAD Swiss, nice. How much slippage do they experience? I don't know. I haven't heard any direct stories about slippage. How does AxiTrader treat their clients' losses in these circumstances? Well, the way most brokers will do it is saying, well, the clients, if you had your initial margin, the market, if you were in a trade, and your initial margin, this is a demo account, so I don't give a shit. If you you see your initial margin is 1%, and they've got 20, close to 20 grand on the in the account. That falls to negative, right? So now my equity is minus 5,000. What's happened with FXEM, who lost 225 million, is that it's the clients who lost 225 million. FXEM didn't, but FXEM will take on that 225 million and try and get it back from the clients. And same with AxiTrader, is that they would attempt to get it back from the clients. Mr. Secker's email is saying, "Oh yeah, what did he say? Anyone with an open position which was at risk would have been slipped badly," is potentially true, but it's also very opportunistic of Mr. Secker to say, "Oh yeah, we'll refund you £100,000." He's actually not refunding you £100,000. He's saying it's on rebate. So what that means is you've got to get that £100,000, you need to trade £100,000 in commission. And he's not going to give it to you. He's not going to put $100,000 in your account now and say, right, here's here's £100,000, because you lost £100,000 with FXEM or whatever. Here's £100,000, go and trade it, because you can just withdraw it and disappear. He'll be saying you'll get your £100,000 once you've traded to the value of commissions worth $100,000. So it's a little tricky, and it's certainly opportunistic of him, and I think it's, certainly if I was running a business I wouldn't be doing that. But that said, Capital Index is where all the prop accounts will be going. I've got to go and create them all in Capital Index, and this brings me to another question, is what's the benefit of Capital Index over AxiTrader? There's really little difference in reality. They're both MetaTrader 4 platforms, so in terms of how to use them, there's little difference. There's whether you have a personal account with them or a your prop account with them, there's not going to be much difference. Right? But 7, no, I don't think so. About 90. 200. So yeah, there's very little difference. One of the biggest differences is going to be the products available through MetaTrader, through Capital Index. That's going to be a big difference. You'll note that of some of the currency pairs that Capital Index offer, AxiTrader offer a few more, but then Capital Index offer a few more commodities than AxiTrader might. So that's one difference. Another difference might be the spread, and certainly the if you look at in terms of your swaps might be different as well. And you can go and check all of these, look at your demo account or go to the capitalindex.com.au website and verify them all. There's little difference. I suppose the biggest difference is that this company, Capital Index, is based in Europe, even though your funds will be in Australia with Westpac. It's a European-based company, whereas Axi is obviously an Australian-based company. 6 of one, half a dozen the other. Most of the FX brokers in Australia are European or Asian. Invast is Japanese, IG is European or English, FXEM is American. So there's very few Australian-based brokers. Not much of a huge difference. So it's up to you where you have your account, but Knowledge to Action will be nominating Capital Index as their preferred broker from now on, and all your prop business will be with Capital Index. Okay. So coming back to the one thing I can't quite work out when I told these people to remove Euro Swiss sell orders, wouldn't it have been better simply to say don't trade Swiss if the value of the Swiss dollar may have been at risk? Well, look, no one expected the Euro Swiss to, the Swiss National Bank to remove the floor. If anybody did, then they and said, yeah, I picked it, they're full of shit. And you've got to trade what you see in front of you, and what was in front of you was, you wouldn't be selling in front of the Swiss National Bank. Does that mean that the Swiss dollar may have been at risk? No, not necessarily. Again, you can only deal with what the information that you know. You can't deal on unknowns. If you continue to look for unknowns, then I suppose there are quant models that do look for unknowns and try and take advantage of that. But good luck to you trying to do that. The Swiss strengthening favoured the trade, but the other Swiss crosses like the pound Swiss were trending up. Yeah, that's because all those the pound was getting stronger, the US dollar was obviously getting stronger, and the Kiwi dollar was getting stronger, and the Swiss was caught up with the euro and getting weaker. And because of the Euro Swiss cap or floor or peg, whichever way you want to call it, the Swiss wasn't going anywhere, and as the other currencies appreciated in value, you're going to get them trending up. Okay. In terms of capital index treating your stop loss, they would not treat it any different to the way AxiTrader. You would have got monstered no matter who you're with. Whether you're with a prime broker such as Deutsche Bank, your stop would have got monstered. None of them would have honoured any sort of stop at $2. If they did, then they run the risk of being out of pocket of $225 million or more. IG took a loss of $40 million. If they had to honour the stop loss, which they don't have to, it's perfectly within their rights to slip a stop. You think Greg Secker's going to honour, if he had client losses of 40 million, you think he's going to come out of pocket and say, yeah, here's 40 million? Fuck no. Not at all. Capital Index will treat your stops as the same way as any other broker would. Alright? And if he tells you otherwise, then he's having a laugh at your expense. Anyway. Right. I've got some... Oh, you guys have been making lots of comments. Okay. AxiTrader slippage. Let me just have a look at that, because you're online. Did you? Were you long this Euro Swiss? Were you? Do we have to reinstall MetaTrader for our demo accounts? You'll need to install Capital Index onto your platform. Onto your laptop or trading, whatever it is. Is this slippage? I don't. I'm just going to come back to Bob's question before I go into that. Is that you'll need to go to capitalindex.com.au. Okay, let me just and get their demo account. If you go to their website, capitalindex.com.au, right? No dealing desk. Sure, whatever. A load of crap. Open a demo account, right? And through that process of opening a demo account, or you can even open a live account if you want and fund it. But through that process of doing that, you will get the MetaTrader version of Capital Index. You can see here I've got quite a few. I've got AxiTrader, I've got Capital Index, and Admiral, and they're all MetaTrader. All those four are MetaTraders. So you get various you can have the MetaTrader for Capital Index, right? You'll then, for your prop account, I will give you a login, and here you'll just go log in to a trade account and put in the details that I give you for your prop demo account. Right, and then if you're trading live on prop, you will also get from London a live prop account. So you'll have potentially 3 accounts: your personal account, your prop demo account, and your prop live account. Okay, and it's just a matter of logging into which account that you're wanting to trade on the day. Does that make sense? Okay, slippage. Actually, is this slippage? These two screenshots were taken in the last 2 minutes of trade on Saturday morning. You can see the first shot that the buy line is below the top of the bar, the buy line. And only seconds later the buy line is well above it. Oh, this red line here. That 70. Yeah, that's pretty much slippage. It's an old way to look at it. But what she's suggesting is that we can see here the buy line is at 76.26. That's this red line here. Don't know if that is the red. That is the buy line though, because your buy line is generally the white one here, and this is the sell line. It's the ask line. Pretty sure that is the ask line. And here's your buy line, because you've got 76.26, and then it goes to 76.25, and that'll be your sell line, and so the spread gets a little wider, right? So that's not exactly slippage. That's because you can, if you go into properties, you can say of any MetaTrader, you can say show me the ask line, right? And that generally comes up as a red line. As you can see, it's just showed as a red line. We've got a 5-minute chart. That's the red line there. Whereas the bid line is, if I go to properties, it's currently grey. Let's make a green line. Okay. Yeah. So there's the spread in effect. So this is the bid and this is the offer. Does that make sense? And I think that's what you're looking at. Is that your buy line is this white one here, and that's your ask line. And the ask, yeah, seconds later the ask has jumped up a few pips from being around here to there, and that is just the spread getting wider. And that generally happens on the close of the market. Anyway, okay. You were short and you're in profit, and this is the euro pound. That's good. Happy days. Right, yeah, the red one will take you out. If you're short, it's this one that takes you out. But again, that's not really slippage. Slippage is if slippage is when there's no trades in the market effectively. So things like this, the market's there, and you have a stop loss under here. Where are they going to fill you? Where can they fill you? Well, that's at this price here. This was obviously from Saturday morning to Monday morning, was it? Or maybe this was Saturday morning to Monday morning. Or maybe that was. What is this? A 1-minute chart. Well, yeah, here you can see the slippage. Yeah, but yes, I am long. So for me to get out, it must match. I'm going to be a seller, and I sell at this green line. So when that green line matches this red line here of my stop, I'll be taken out. Yep. And if this green line must match this red line here of my target for me to get taken out, not this red line. Conversely, you're short, so you're up the other way. This red line must hit, if this orange is your target, must hit your orange line as your target, not the white line, which is the bid. And again, if this one hits your stop loss, then that will take you out as well, because you're a buyer and you buy at the offer price. Please clarify the vocab bid, ask, buy, sell. Well, the bid is where the piss off. Java update. Java. The bid is the same as the buy, right? So the bid is this. This is where the buyers are, and they're bidding that price. The ask is where the sellers are, and they're selling at that price. Yeah. So the ask is where the sellers are, and the bid is where the buyers are. Okay. F9 gives me an order ticket. Their terminology is really incorrect. I don't know who taught them how to what the terminology is wrong, but you don't sell by market or buy by market. You sell at market, and you buy you market for. The old terminology on the floor days were I'm a seller at and I'm a buyer for. So it's price for. Like I'm 59 bid for 5,000, and then I'm a seller. I'm 61 offered. I'll sell at. I'm 61 at. I've got 300 for sale at. So I don't understand why they use buy and buy. It's incorrect. But if you're a seller, you're selling at their bid price. So this is their bid price, and you can see these prices here match these prices here. Yep. So you're selling at the bid and you're buying at the offer or at the ask. Okay. Right. Is a dollar I've got to go way back here. Right. Dollar Swiss fell by 3,000 pips, and you have students with positions in that. How did their account end up? No, I didn't have positions in. We only had one account whose account got liquidated. In all of our prop, we only had one account that was liquidated. So we didn't have anyone in Euro Swiss. Any idea when prop will move to capital index? It'll be. I'm aiming for March 31st at the end of this quarter. It may be before that, but that's the date I'm aiming for. I haven't got a confirmation out of Sydney yet, but that's the date I'm aiming for, is March 31st. So April Fool's Day you'll be on capital index. Okay. There is no NOC SEC. Yet they don't have any NOC SEC. I don't think they have NOC SEC. No NOC SEC. Bummer. They got a crap load of pound crosses. If you're happy, this is the problem when you deal with pommy companies. They love their own stuff. Get out. Go away. Thank you. Yeah, a lot of pound crosses, so you got your pound knock. What the hell is this? Huff. Pound huff. Hungarian florent. Whatever. Yeah. So that'll happen March 31st, okay, guys? If not before. It might happen before, it might happen March 1st, but March 31st is the date I'm aiming for. April Fool's Day, is that a joke? No joke. Don't be suspicious. You can't afford to be a suspicious person if you're trading. Doesn't help. Doesn't help at all. Right, so IC, why is everybody calling them IC? It's capital index. You're all getting mixed up with IC markets, run by that little wanker of a bloke. IC, the prop traders whose accounts are now down 5%. Right, so are there prop traders whose accounts are down 5%? There was one who went down 5% over the Swiss National Bank announcement. And that was it. Okay. Are there prop accounts down 5%? Yes, there are. But only one from the Swiss National Bank announcement. Okay. Right. What else? Yeah, capital index. it's got everything all the pairs that I've covered. It's also got all these profiles, and you get to access these profiles, legacy, learn FX, stocks, commodities, if you've done the course. Right, Master Trader, you must have done the UW course. Partner program is prop. Right, so we can see here that we get this skin from the company called Smart Chart when it loads up. Come on. Okay. We get these skins that have all this information. Right. So this is your account, your overview of the account. Gives you a journal. Gives you tutorials. Gives you you can talk to your coach and arrange coaching sessions. Fuck off. Watch videos. Look at an economic calendar and get some news. These are your 3 strategies. Alright, and if you go into the strategy time frame, symbols. Alright, we obviously don't want these, or potentially you don't want all these index in them. And I certainly wouldn't have the bonds in them. But let's just say all these currencies. Alright. Whoop, there's a bond in there. We don't want those bond bubbles. Right, I don't want the shats. Don't want oil. I mean, you can if you want. I'm not really fussed on your demo account. Alright, and then we save that. And then here we can see, and you should do that for all of these. These pairs are obviously not giving us any signals, whereas all the Swissy pairs are. So if we go and have a look at the CAD Swiss, it should be giving you a signal, or it's close to giving you a signal. Alright. If we look at this, it says what's the action? It's an inside bar. Is that something you trade from? No. Well, not something I would trade from. And so these are the skins that you can get. You can sit there and watch the trade terminal. Alert watch, you need to log in for that. But you can sit here and watch all of these and get which ones are close. And these ones are obviously nowhere near being close. So it sort of filters all that out for you. As I would always argue and ask you to do, is go in and do your own analysis of it. Right? Don't just take it for granted that because the software is saying, hey, there's a trade signal, you should always go and look at it yourself. Right. Indicators list. Yeah, you should always go and do your own analysis. But that's what you'll be getting when you start with your live prop account. Okay. Right, subscribing to Smart Charts, I thought it would be easy to use. It would be as easy to use as eSignal and more history, but it seems not. Well, don't know about the history side of things. MetaTrader is in itself a different and a little clunkier than eSignal. eSignal's really is quite easy to use, but in terms of historical data, there's plenty there. If you look at the Aussie Kiwi, the AxiTrader only went back to sort of 2000, whereas if we can see here that we're going all the way back to 95 with Capital Index, and to me that's enough. 20 years or 30 years is enough. You know what? That's about when I started trading in '94. So that's the history of my trading. Um, 20 years. Yeah. So it's, you know, in terms of history, yeah, you know, e-signal may go back beyond 94, 95. Um, and there might be some pairs here that might go back, you know, euro. Let's see how far that goes back. Well, that goes back to 93. If I take that off, it might even go further. Well, 93. So um, that's quite a lot of data that you got there. Yes, e-signal may go back earlier than that, but how far do you need to go back? Yeah. Right. Anything else, guys? Um, big week this week in terms of we've got ECB out. There'll be a lot of bullshit going on in the market on Wednesday and Thursday, and I would suggest, you know, not to take a long-term trade in the euro or the Swiss around that time. It'll be interesting tonight to see. We've got the Canadians as well. Interest rate announcement. And the Europeans. So Wednesday night you've got you've got Canadians, and Thursday night we've got the Mr. Draghi. A whole bunch of flash. So later in the week it'll be interesting. Tonight will be interesting in itself, that to see, now that they've had the weekend to calm down about things, to see how they're going to approach it. And there's a US holiday. I forgot all about that. What's that? Thanksgiving? No, Martin Luther. Yeah, Martin Luther. Thanksgiving's in November, isn't it? So busy week. Be careful out there. No need to start the quarter off with a loss, but yeah. I shall chat to you Wednesday unless you got any other questions for us, guys. I've answered all your questions online, haven't I? Pretty much. Okay. Very well. Thank you for your time, and I'll see you all Wednesday morning. Cheers.